Hey Harvesters, and welcome to Project Premium Harvest. My name is Matt. In today's video, I'm going to be going over my portfolio for the last 2 weeks. I apologize for not having consistent updates. Life has been busy. Family came into town, and on top of that, I was in the middle of a move. We are past that point, so now let's give you the information you want. So a couple of the talking points in today's video is I'm going to talk about what conditions I'm seeing in the market. We have a little bit of a downward trend, so there might be some opportunities that we can potentially run some calls on and make a little bit of extra cash on the side, in addition to our normal high income ETF investments. Okay, we're going to talk about the portfolio. We're going to talk about the premium distributions, talk about my margin usage, and then we'll just start from there. And then if I have anything more, I'll add to it. Let's get started. All right, guys. So looking at my Robinhood brokerage account, we are at $92,703.48. Over the last day period, it's showing a net gain of about $2,000, but that doesn't tell the whole story. Over last week or over the last 2 weeks, this previous week in the market, especially Thursday, Friday, there was a significant dip in the market. Therefore, if we go and spread this time frame out to about a week, I'm down about $7,516.52. But with these types of investments and these funds, I'm not necessarily too worried about it, right? This is going to be below my cost basis. I'm going to get a distribution and I'm just going to reinvest it. So I'm going to buy it at a cheaper rate. But I'm going to talk about my portfolio strategy after I kind of just talk about what we're observing in the main satellite view of my portfolio. So last week, we're down 7,500, but if we go over the last month, or even if we go back even 2 weeks ago, my account was about 98,000. It was almost $100,000. And then now it dropped down to about that 92,000 mark. So for me, these fluctuations are pretty normal. And then in the last month, it's showing my account was down about $10,358. But for me, I'm not necessarily too worried about it, because if we go to the 3-month marker, yep, account still showing down, but over the last year period, I'm up about $20,000 in this project. And this project has only been going on for about 9 months, about 10 months. And I've already pulled out about $34,000 to pay back some of my HELOC loan. So far, this project is relatively successful. If it's going to continue staying the course, I definitely think since there was a dip in the market this past week, I think it's going to go back up. My account will go back somewhere in the $95,000 to about $100,000 marker. And then hopefully for the rest of 2025, we're in a bull market. I don't necessarily see conditions where we could be bearish, but nobody has a crystal ball. And if you did have a crystal ball, you'd be a trillionaire by now. Cool. So that's kind of the overview, a satellite view of the account. Now let's talk about the individual holdings and how I view them and how I view this strategy. All right. Now talking about the individual holdings, the way I view Nvidia here is it pays back my HELOC loan and some of my margin interest rate. I have about 1,500 shares, and the last 2 months, Nvidia has paid me about 0.82 and 0.89, so almost 82 cents and 98 cents per share. So that's roughly, like $1,200 to $1,500. So I can pay it into the HELOC loan or the margin. I do not reinvest any of this Nvidia money. And then whenever my HELOC loan is done, I plan on taking these 1,500 shares, or about the $30,000 investment, and I plan on putting into something a lot safer like GPIX or JPQ, maybe split between the two, so that I can have a fund that, yes, it pays a distribution, but the share price and the shares themselves don't fluctuate too much. So that's the way I view in my long-term strategy with Nvidia. I don't necessarily like holding single fund high income ETFs, because you are at the mercy of that stock, right? If Nvidia is going gray and it's shooting up, these premiums are going to be great and the stock's going to go up. But the second Nvidia has a bad red day, you're going to suffer a lot harder instead of just having it in a spread out index like ymax. Cool. So that's Nvidia, my strategy with Nvidia. But now let's talk about the roundhill investments. So I view my investments in 3 different categories: tier 1, tier 2, tier 3. So tier 1, that's more so like I am being very aggressive, investing in a single high income ETF where it makes a lot of premium, or something that even just I'd consider tier 1 also like ymax, ymag, just for the amount of money you're paying per share, the distribution yield is going to be a lot higher, but you're going to be affected by NAV erosion a lot more. And I view my tier 2 funds more like my roundhill funds. There's going to be some NAV erosion, but it's not going to be as high as what you're going to observe with the yieldmax fund. And my tier 3 is more my curve, my GPIX types of funds, where the share price doesn't fluctuate too much, but you're going to be getting some sort of distribution. I think Kurv is more like a 2.5 because it is sometimes they run covered calls on their on Amazon, and sometimes they run synthetic, so it's kind of a balance. So I'd consider like Kurv a tier 2.5, but they do a better job than yieldmax of not losing to NAV erosion, and the distributions are pretty good. But GPIX, the premium is a lot less, but you get to hold the share price a lot more. So for me, eventually I want to have a big core holding of GPIX and JEPQ so that I can just borrow against to either run my own options or into high income ETFs. So that's kind of how I view it. So with that background information, for rdte, I have about 1,460 shares. For xdte, I have about 1,200 shares. Ymax, 1,130, and then ymag about 1,060 shares. So for JEPQ, we have about 387 shares, and for GPIX, 444. And then for the two Kurv funds at the bottom here, we have amzp at 1,252 shares, and then Goop 722 shares. Cool. Now that we kind of talked about my portfolio and how I view it, I plan on talking about how much I initially invested into each fund, where it's currently at, what I'm reinvesting in, and what the premiums look like. But before I do that, let's talk about a few other things. The few other things I want to talk about is some of the plays I am looking to make in the next week, because earlier in February, I did a 2-year leaps on Nvidia. I bought in roughly when the options or the share price was at $122 a share. Basically bought a leap on them, and then I sold out when the share price hit about $135. So I made about $555 in that transaction. I only did one option, so if I did a couple of more and used more of my buying power, I could have made more money. But for me, I want to be very conservative when it comes to, because I already have about $200,000 in margin and I have about $92,000 of my own money. So I really want to balance out like my risk. And when I run options, I only want to run plays that I believe are high conviction. So one of the high conviction plays I have right now is SPY. So currently SPY is trading at that $602.70 range. It was trading about a week ago at $610 right before this massive dip, right? $610. And then for whatever reason, there was a big dip. So today is Sunday, the February 23rd, tomorrow, February 24th, in the early morning, I might just buy a 2-year leaps on them on SPY, right, with the anticipation that the share price is going to shoot back up to this, 610, maybe not shoot up, because since it's a 2-year leap, I have time for it to go up. But eventually, once it hits this, 605, 610 threshold, I might just sell out for a couple $100 gain. Maybe I might buy one or two. So that's kind of one of the plays I plan on looking forward to, and just going to be monitoring to see if I should execute it. Because if in the pre-market this thing shoots up to like 605, that's not really a good buy point. I'm really trying to buy in that 600, 602 mark right now. Now let's talk about MSTR. MSTR has been on my radar for quite some time. It is currently trading at $302. So there's two different plays we can do here. We could either run it against, we can buy msty. But for me, I don't want to buy msty right now because I'd rather just run the option myself, and I'll have that 2-year time frame, because I'm going to do a 2-year leap, 2-year call on them, where I'm just going to wait out until they finally hit the specific threshold I'm looking for. So right now, MicroStrategy is trading at that 302, 303 mark. So what I want to do is I want to buy a 2-year leaps on them with the anticipation that it's going to shoot up to about 350. Right, which is not outside the realm of possibility, that 350 mark, maybe even that 380 mark, so I can cash in a couple $1,000 gain. Because Bitcoin is very volatile, I think it's trading at $95,000 right now. The second it shoots up back to that $100,000 range, I can see MicroStrategy MSTR being at that 350 range, so we can at least lock in a couple $100. So that's one of the other plays I'm looking forward to right now, is buying a 2-year leaps on MSTR and then cashing out later down the line. Probably once it hits that 350, I'm very conservative when it comes to calls. Once it hits 350, or if I see a good chunk of money, if you see the money, you take the money. It'll just be like it'll be dependent on the market conditions at the time. The other thing I want to talk about is Nvidia. Nvidia has their earnings this next week. So let me pull up Nvidia. So Nvidia has earnings this week. Oh no, I meant to do Nvidia. Whoopsies. Nvidia. So Nvidia has their earnings this week, and currently the stock is trading at $136.09, right? I think the option that I ran about a week ago was perfect. I bought in at this $122 mark, and then I sold it at this 135. It hit 140, but for me, I'm not looking for the exact top. If I can get that range in between and make money, that's worth it for me. But Nvidia has an earnings call February 26th. I think that's a Wednesday, Tuesday, 24th, 25th. It's a Wednesday. And so a couple of things could happen, right? So this may also affect the S&P 500, because if Nvidia has a great earnings call and the numbers that they talk about and their future planning and investors are excited, I can see this Nvidia shooting up to maybe some of their previous highs, back to that 140 mark, 145. But if the investors find something that is wrong with like the Blackwell chips and demand isn't as high as anticipated, I can definitely see this going down and then also tanking the S&P 500 with it. So I'm very hesitant at running like the SPY leaps because of this as well. So I might, depending on what the market conditions look like, I'm not going to go full send. I might buy 1 or 2 calls of SPY. But for Nvidia, if this fund goes back down to like that 122 mark, I'm probably going to buy another call on it. And then do the exact same thing, right? Basically ride it from like the 120s up into the 130s. And the last thing I want to talk about is Tesla. For this to make sense, I'm going to look at the last year chart. And in December, Tesla had its, 52-week high, that $479.86 mark. For me, I think I might run a couple of puts, maybe not a couple, but maybe one put on Tesla, because the way I view this, there has already been like a significant downward trend. Maybe right now might not be the good time, but next time that Tesla hits a 52-week high, I'm just going to hit another put, because the way Tesla works is it does parabolic movements up, and then over time, like investors, they kind of slowly sell out, cashing in gains. But for me, there might be enough proof where this fund might go back into the 200 range, that 250. So if I run one put against Tesla and it's currently trading at that 339.48, I can potentially make a couple $1,000 if Tesla moves that way. Tesla just had a earnings call and it's already continuing to go down. So the way Tesla works, I think in the next year, they talked a lot of hype and a lot of excitement in this December timeframe. So I definitely think it's just going to continue trending down, because the way Tesla works is it hits a 52-week high and then it just trends down, 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 down until they bring their production of their products out, right? Because they promise like a robotaxi, they promise the Optimus robot, the Neuralink stuff, but that's still going to take time to actually produce. And if we look at this graph here, how it hit this massive 52-week high, I think there's still a lot of room to go down to that 250, 260 mark. So I think tomorrow I'm looking towards that MSTR play, looking at the SPY leaps at that $600 mark, puts on Tesla, and then more so, if none of these plays look like I want to execute on, I also have the Nvidia coming up on Wednesday and what the earnings are going to look like. So we'll take a look. And if earnings are good, then maybe my S&P 500 leap might pay out and then I can cash out this week. Those are kind of my thoughts. So let's move on to the spreadsheet stuff. But before we go to the spreadsheet stuff, I just want to do a call out. I cannot believe this channel is at about 1,750 subscribers. You guys in this community are absolutely amazing. If you're new to the channel and you're just watching for the first time, I would really appreciate if you subscribe. It's absolutely free cost to you. You're going to be continuing to see my material go out there. So I just want to do a shout out to the community. Appreciate you guys. Love reading all your comments. Let's continue over to the spreadsheet section. All right, guys, now that we're at the spreadsheet section, let's take a look. So for the last 2 weeks, I'm going to scroll in here. The last 2 weeks of this project, February 14th, 2025, I had a distribution of $2,223.20. About $555 was that Nvidia trade, and the rest was just the high income ETFs. And then in the past week, it was only the high income ETFs. I didn't see anything in the market that I liked where I would run my own options. when I run my options, I like to be very deliberate and very, what's the right term? I like to have conviction that something is going to move a certain way. Otherwise, I don't invest in it. With that being said, last week, February 21st, 2025, made $1,196.72. Let's take a look at the account total. So the account total has been down a little bit. It's currently at $257,304.23. Right, the highest it's ever been was at that $266,386.73 mark over here. And there is a little bit of a difference what you're seeing in Robinhood versus what you're seeing on the spreadsheet. So in Robinhood, I like to show if I were to sell out of every one of my stocks today, that $92,000 mark is all the cash I would have left over. And this spreadsheet is accounting for everything I'm invested in, including margin. So ideally, this is the actual number of my investments. But if I were to sell out, I would have left over. That is what is in my Robinhood. Cool. So now that I kind of pointed that out, let's continue forward. So for xdte, let's take a look. I invested about $58,750. That's what's in the parentheses. And let's compare that to what we are seeing right now. So currently the xdte account is at $59,562.44. So even though the market is down a little bit, my investment in xdte isn't, because I'm reinvesting all of my distributions. So theoretically, if I was living off of this, I would be up about $750 and I'd be able to pull that out and live off of it. Eventually, when this number is a lot higher, the number I'd be able to pull out would be higher, so I can live off of it a lot more effectively. Cool. So for the xdte premium, xdte paid me about $264.39. And now let's go over to the rdte value. As you guys see in the parentheses, I invested about $59,295. And if we look at the current number right now, it's at $57,660.85. I don't like seeing this number because I currently reinvest 100% of my distributions back into rdte itself. So theoretically, I would not be able to live off of this if I were to, be financially independent and don't want to go into work anymore. So there is NAV erosion for rdte. The market is trading sideways. Yeah, the market is trading sideways. So you wouldn't be able to live off of this right now. But that doesn't change my strategy. I still like having rdte because it's not necessarily diversification. It's just my exposure to small caps. And I like having that little bit of diversity. And if we take a look at the rdte premium, in the last week, I made $296.22. And the prior week before that, it was about $368.52. The one thing I like about rdte is the premium is a little bit higher than xdte. Therefore, that's one of the reasons why I want to keep it. And it's that exposure to that small cap. Now let's talk about ymax. So for ymax, if we see in the parentheses, I had an initial investment of $18,882.40. If we look at the current value, February 21st, it's at $18,342.11. So basically, I'm theoretically down. But if we looked about a week ago, when the S&P 500 was doing a little bit better, I was close to breaking even. I think I was down only about $10. But I've had to currently reinvest every single one of my distributions. So I technically am not net positive at all. So theoretically, same thing with ymax. Since investing in about December timeframe, I would not be able to live off of ymax if I were to use this as a income source further down the line. So that's why I like investing my own money and tracking this myself to see if it's feasible to even live off of this kind of stuff. Because I create those retire on videos, but nobody actually knows what the numbers look like. So here's my, you have to invest in it. And if I don't like these funds, I'm probably just going to tax loss harvest near the end of the year, maybe sometime December or November. So just a thought out there. Cool. For the ymax premium, this is the one thing I do like. The premium is higher for the amount of money, the initial money you put in to the amount of premium you get is definitely pretty high. So that's kind of why when I first started this video, I talked about this kind of like my tier one investments, high volatility, but higher premium. But for the February 14th, I made about $168.88. And for the last week, maybe we can probably make these numbers a little smaller and look better. And then for last week, for 21st of February, we had about that $209.95 mark. Moving on to YMAG. Man, I'm gone for 2 weeks and all of my charts are sloppy. Okay, so for YMAG, the value is that I purchased this at, it was at $19,999.65. Currently, YMAX for 21 February is at $18,994.87. The week prior, it was at $19,303.64. So since buying this in early January, I have not broken even yet. And I'm reinvesting every single one of my dollars. So same thing with the ymax and rdte. I would not be able to live off of this fund if I were to stop working. That's not really what I'm looking for. However, it is only 1 month. The market is kind of in a downward trend right now, or it's very choppy. So we'll see how this fund performs over the next year. And same thing with ymax. With ymag is that if I really don't like these funds, I'll just sell them out and then just use them for tax loss harvesting. All right, but let's talk about the premium ymag paid out. I do not like it when ymag has a $54.04 premium. About 2 weeks ago, I think the distribution was like 5 cents a share, which is kind of a joke. I don't know. I might as well, you almost like don't want to get paid if it's that low. However, just kidding. I still like my money. It was at $54.04. And then last week, ymag paid out $145.76. Cool. All right, now going on to the curve funds. This is one of the funds that I wasn't really happy seeing going down pretty hard, is my amzp. So my initial investment for amzp was about $40,000. And if we look this last week, it was $37,572.52. The week prior, it was at $38,589.15. Amazon is down a little bit. And with that being said, so is amzp. But before that, this was trading in a relatively good range. I bought that at $40,000, and it's always been a little bit higher except for the last 2 weeks. But it is what it is. And I got my third ever amzp payment. That was about $797.55, and that was a week ago. So that's pretty exciting. The amount of premium to like the NAV stability is still better than what I view from yieldmax. So I'm still going to keep these funds and maintain my investments in them. Now let's go over to Goop. I had a $20,000 investment into Goop. That's in the parentheses, and I need to update this now that the Goop total value is corrected. So about a week ago, I was actually below what I bought in Goop at. It was at that $19,754.18. Right. I don't like being below my initial investment, but then this last week, Goop has gone up a little bit and it paid out a distribution. And currently the account value for Goop is $20,338.74. And if we look at the Goop premium, it was $280.40. So it's about 40 cents a share. So that's kind of what I'm looking for. NAV stability up top and a relatively decent premium at the bottom. Cool. Now let's talk about the Nvidia value. So my current investment in Nvidia is $33,884.55. In February 14th and February 21st, it's been trending a little bit downwards. February 14th was $32,220, and for February 21st, that $31,905. However, I did get some pretty good distribution payments, and eventually when I have my HELOC loan paid off, I'm probably going to get rid of this ETF and put in something more safer like GPIX or JEPQ, maybe even a curve fund, but I'll kind of decide that at the time, see how curve fund performs this next year. And for the premium, we didn't have any premium because Nvidia is a Group B payer and it's probably going to pay out, I think, next week. For the GPIX value, this is steady as she goes, right? I invested about $22,100. Currently, my GPIX value with reinvesting all my dividends is currently up. It's at that $22,482.08 mark. So I love seeing this. My investment's going up. The price has not fluctuated too much at all. Pays a distribution, not that great, but it's still, I think, what, 35 cents or 40 cents a share. I definitely plan on having a huge portion of my portfolio. Every time I run an options, I'm probably going to put any of the profits after taxes into GPIX so I can grow this so that I can borrow against it. GPIX premium, we didn't have a premium over the last 2 weeks, so we're not going to talk about that. JEPQ value, same thing here with JEPQ. JEPQ has been very stable. I had an initial investment of that $21,915.48. Currently, if we look at February 14th and February 21st. February 14th was $22,644. And for February 21st, the total for JEPQ is at $22,350.62. So I'm basically up almost $350 on this fund, right? The premium, I got a nice premium. The NAV is pretty stable. That's what I like. That's what I want to see. That's what you can retire off of, GPIX and JEPQ. And then for the JEPQ premium, did not pay out on either of the last 2 weeks. And I think that wraps up all of the spreadsheet notes. Let's go take a look at what my HELOC loan looks like right now, and then some closing thoughts. All right, looking at this section here, currently I have about $47,188.94 left to pay back for my HELOC. Earlier this year, when I started this project, the HELOC loan was about $83,104, and throughout the weeks and the months, I have got it down to that $47,188.94. And if we take a look at that, if we took a look at my Robinhood, if I sold out of everything in my Robinhood today, that $92,629.82, subtracted from that $47,000, from this project alone, I'm net positive $45,440.74. So basically, this is the way I look at this. If I took out zero debt, I took out zero HELOC against a rental property I own, I would not have an extra $45,440. And once his HELOC loan is paid off, that money, instead of paying it towards that HELOC loan, is going to be more cash that I can grow my account with. So there's a lot of win-wins in this situation here. It's very exciting what the next 3 months are going to be. I think the 1-year anniversary of this project is in June. So I think we have about 4 more months until that mark. So it's exciting to see what the next 4 months are going to bring and the next couple of years along with that. All right, guys. So here are my closing remarks for this 2-week update. Appreciate all of you guys that are stopping by. And if you are new to the channel, I hope that you do subscribe. And what I said is something that you're interested in. Yep. So next week I will create the monthly overview for February. So stay tuned for that. And then throughout the week, I'm going to try to come up with a couple of videos here and there to keep you guys entertained. I'm going to leave you guys with this message. We are all destined for greatness. So we need to start acting like it. Love you guys. Peace out. Matt out. See you soon.